Now let's welcome my next guest, Logan Mohtashami. He's a financial writer and blogger covering the U.S. economy. His work is frequently quoted in Bankrate.com and Bloomberg Financial. He's also a contributor to Housing Wire. Logan, thank you for joining us today.
Pleasure to be here.
I got to tell you, of all the people that I research and look at, when I look at the information that you provide the public on social blogging in relation to finance, I am beyond impressed because you're about the most honest person out there. You tell the story and you tell it like it is. And so today, as you've been watching, we've been talking about the Trump tax reform policies and what the effect has been on the economy with deregulation and the China trade deal. And we'll talk a little bit about real estate because that's really kind of your wheelhouse. And so, one of the things that affected real estate at the very inception of the Trump tax reform was the decrease in which your ability to deduct off property taxes and mortgage interests got dropped to $750,000. And so, but yet we see housing starts expanding. Can you explain the divergence and the dynamic as to why that's happened?
Well, I think it was a great headline that, these states like New York and California were going to get hit with the mortgage deduction, but realistically, a very small amount of people were going to be impacted. It's because you still have up to $750,000 of mortgage interest rate deduction. So you're talking about the million plus market, which is very small. So it wasn't a very valid thesis to make that the general housing market or even California housing market was going to get hit. What had happened was in 2018, yields went up, rates went up, sales came down a little bit, and people try to correlate that to the tax cut, but it wasn't the case. When interest rates fell back down again, all the markets recovered, new home sales, existing home sales, even California sales came back up to par kind of. So I think that was a great story for people to talk about, but it doesn't really have any velocity to the general housing market.
Huh, interesting. Well, one of the things I wanted to ask you. And so, how do you feel President Trump is doing overall in relation to the economy and some of his policies on deregulation, the trade deal? The Fed's been lowering rates, they increase rates, they lower rates. We've got about 15 seconds here, Logan, so give me a quick answer.
Well, I think low taxes and continuing government spending, both those two things together will keep this expansion going out here. And as long as that continues, it's good for this expansion. There's nothing out there that would actually, right now, that would curtail it to any degree.
All right, Logan, thank you very much for that. We'll be right back after this break. Welcome back to The Income Generation. We're talking with Logan Mohtashami. He's a financial writer and blogger covering the U.S. economy. Logan is also a contributor to Housing Wire. Thanks for sticking around, Logan. So we see real estate's peaking at prices again. Mortgage levels are at their highest level pre-2008 or right around 2008. What's driving this expansion at this time in that area? Because the economy is very strong. Is that the reason? Is it because of employment? What's the reason those areas are doing well?
Well, I think the discussion with housing needs to be broken into two different categories. The new home sale market is much different than the existing home sale market, but is more important to the economic expansion itself because housing starts are construction jobs and big ticket items. We've had the weakest new home sales cycle ever recorded in history, but we're also running into one of the best demographic patches ever recorded in history. So the slow and steady cycle can still move up higher because if you look at housing starts on a 50-year average, we're not that much higher than where we were decades ago. So we have legs as long as the 10-year yield stays below 2.62%, the cycle can go because housing starts are one of the main things you see that declines into a recession. So low rates, good demographics, no overheating demand. You can look at purchase application data, they're only at 1998 levels. New home sales haven't even closed a year above 750,000. So this has legs because it has not been overheating. And I think that's the key for not only the housing market, but for the economic expansion as well.
Yeah, I agree with you on that. And as long as the lenders don't open up the floodgates and giving people credit that shouldn't have credit, I think we'll be in good shape there. With the foreclosure rates, I think are at 21-year lows right now. What are the default rates on mortgages nationally?
They're actually, yes, they're very low. But the main thing about this cycle is that this cycle produced the best homeowner loan profile ever in our history. If you look at the last 10 years, you have great nested equity, which means that they have equity positions to protect them. FICO scores are very high because homeowners now have very good cash flows, and there's no exotic debt. I think that's the main thing. There's no unique debt structure that recasts or will force a foreclosure. Housing's back to what it used to be. You need a job loss recession first before you see a real expansion in delinquencies, which should be much lower than what we saw in the housing bubble. These are about as the most opposite cycles as we could ever see.
So is that something economically that President Trump could put as a feather in his cap for claims of accomplishments with the best cycle that you said a few seconds ago in history?
Well, as long as the credit doesn't expand out to a kind of a how should we say it? Giving debt to people that don't have the capacity to go debt, you keep the cycle going as is. Fine, excellent, because that's a legislative, that's congressional, and the president would have to ask for that. We're still good to go there. There's nothing that has been done that would allow banks to facilitate loans to people that probably should not have them. So we're still good to go there.
Excellent. Well, Logan, I want to thank you for being here today, and thanks for joining us. We look forward to talking to you again in the future. Thank you so much.